Kia ora tātou, and welcome everyone to this Impact Investing Network webinar. Today's topic is on philanthropy and its relationship to impact investment. We've really lucky to have two very special guests here today, Raewyn Jones from WEL Energy Trust, and then Alistair Rhodes from Bay Trust. Raewyn has been the Chief Exec of WEL Energy Trust for a number of years now. I think it is 2014, if I'm right. And Alistair, Bay Trust, for a Chief Executive of Bay Trust, I think since 2015. So two people that have been involved very much in the grant making and the impact investing space. So we'd really love to get their thoughts today on what they've done, their experiences, and whether the future could hold. I wish you'd just pass over to both of them just to give a little bit of context on themselves and their backgrounds, and we'll start to get into the Q&A side of things. Raewyn, if you, I think Raewyn just passed on to Alistair.
Yeah, no, I was passing the ball, but I will catch the ball, Tan.
Thank you.
I'm Raewyn Jones, I'm Chief Executive of WEL Energy Trust. We're based here in Hamilton in the mighty Waikato. And WEL Energy Trust is, as the name suggests, an energy trust. So our core infrastructure asset is WEL Networks Limited, which is the electricity lines distribution business in our region. So the poles and wires that bring the electrons to your door. Has an enterprise value of nearly $1 billion. So it's a considerable investment that our 7 trustees hold on behalf of the community. We also have a portfolio of investments in equities. And increasingly an impact investment portfolio. We're involved in grant making and community support through that sort of thing. So as Tam mentioned, I've been here for a number of years, coming up to 7 years in the role. In 2017, I was looking for how things can be done differently. Grant making is great. Investing over here makes you some money that you can put into your grant making. But how could we use our investments to make the change we were hoping to see? I was very fortunate, my trust board supported me to go out to England, to the Oxford University, and do the Oxford Impact Investing program, which I was blown away by. It was a whole new concept to me. I know now that impact investment is actually just new words for a very old concept, but to me it was new. Came back to New Zealand, Aotearoa New Zealand, very excited about the idea of doing impact investment, but found quite quickly at that time in 2017, it wasn't really a happening thing quite so much, and it really needed to be developed from the bottom up. So we had a 3-prong attack to it. We thought, let's build a community of practice, which is what all of you are part of today, the Impact Investment Network. You're part of the community of practice, which builds investment in the country. We thought, let's build the ecosystem. So we looked for funds that we could help to develop using blended finance, and also let's just get on with it and do some impact investment. So we looked at what we could do. That's been a learning journey for us over the past few years. I'm very encouraged to see the progress that we've made in New Zealand towards impact investment as a way of positively impacting on our community. Just before I hand over to Alistair, there's one other factor to that for us. Today we're talking a little bit about place-based investment as well. For the Waikato, we use the United Nations Sustainable Development Goals as a tool to help us articulate what we're trying to achieve. And through a 2-year program of community engagement, we took those United Nations goals out to our communities and said, what do they mean to you? What is it we want to achieve together as a region? And the Waikato has what we now call the Waikato Wellbeing Project, which are 10 targets based around the United Nations Sustainable Development Goals. And those are specific targets. So for example, in the area of housing, it's a big aspirational target. We want everyone in our region to be well housed. And so we use those targets to work with others in a collective impact model, using impact investment to try and impact on achieving those as a region rather than just as an organisation. So that's a big theme for us. Alistair, hand over to you.
Thanks, Raewyn, and kia ora koutou, everyone. Look, it's great to be here. I'm really fortunate to sit next to, and I've worked alongside Raewyn for the last 5 years. Raewyn's been a really inspirational in the impact investment ecosystem, but a catalyst for change. And I think, we need more people like this in New Zealand. So, really appreciate her inviting me to the drizzly Waikato to have this kind of session today. So I want to keep my introduction quite short, maybe even a little bit shorter than Raewyn, because Tan's got some really interesting topics he's going to broach later on. And we really want this to be a conversation, so don't be afraid to use that chat feature, and hopefully we'll have a bit of a chat between ourselves. We'll probably argue about a few things because we have known each other so long. Sharing a little bit about myself. Now, I've been CE at Bay Trust for 5 years, but before that, my career was very much commercially minded. So think about airlines, airports, strategy. Don't hold it against me. I was a tax consultant at one stage for my sins. But really kind of understood the kind of commercial world, the kind of commercial market, and the benefits of actually what capitalism can bring. And then over the last 5 years at Bay Trust, really supporting the not-for-profit sector and understanding what those benefits bring, it's really helped create and shape for me my personal passion and purpose, which is we'll look ahead. My children have a good life and upbringing, but I know that's not shared equally around New Zealand. And I also look forward in the future and go, actually, I'm quite concerned about actually what the world looks like going forward. So, what my purpose and passion is about actually making capitalism more inclusive in nature. So as well as caring about the financial returns, it looks after our environment, our communities, and our children's children as well. So that's my purpose. And I'm really fortunate to be part of an organisation that shares exactly the same effectively values. So Bay Trust, we're a large community trust with $250 million of investments. Our purpose is to accelerate bold, meaningful change, ensuring the Bay of Plenty communities and environment can flourish. And we've realised, if you think about that accelerating bold, meaningful change, we realise we can't do that with grant funding alone. We're going to keep on granting, but we need to use all our tools in our toolbox. And so we've been on this journey for the last 5 years, and it's kind of got two elements of that journey. One is using some of our investments from an impact investment perspective to make that measurable difference in the Bay of Plenty region that we look after. And so now we've got an allocation or a target of up to 10% of our investment base. So that's around 25 million, but we can rebalance up to 20%, which is a $50 million allocation to impact investments. And if you think about some of the wicked issues facing us, like housing, climate change, we simply couldn't afford to do, try and make a difference just using our $7 or $8 million grant funding a year. But we also realize that the Bay of Plenty is not an island. And so what we've been doing is transitioning all our investments over the last sort of 5 or 10 years to be more sustainable. So I remember when I first started off, we had, I think, about a 2% exposure in our investment portfolio to tobacco. Yet we were supporting, anti-quit kind of smoking lobbying kind of groups, etc. at the same time. And for me, I think as a, philanthropic trust, you have to look at your mission first. And we have to be about benefiting the kind of people. And so we've transitioned our investment portfolio from very traditional to, a little bit more ESG. We did the negative exclusion, so we excluded the nuclear, the tobacco, etc., to positive exclusions, to responsible. And, for me, one of the most exciting things that we've just moved to in the last couple of months, we've signed off, we're going to have a fully sustainable investment portfolio within the next 10 years. And I think Tan's going to raise that point later on, what the sustainable investment portfolio is. But for me, that's really exciting. And so, I just want to kind of leave it at that. And I realize I talk fast, so I'll try and slow it down, but, hand it back to Tan, who's going to facilitate the next part of the session.
Yeah, thank you very much, Alistair and Myron, for that those intros, and we'll delve a little bit more into your experiences as we go. Alistair, just starting with you, we recently were at we had a breakfast, and one of the questions that got asked was, what is the difference between impact investing and sustainable finance? There's all these terms that are floating around. I just wonder if you could even could touch on that, just as a bit of a reference point for our audience here.
Yeah, you can get caught in a kind of bit of a rabbit hole with all this terminology that gets used, and I don't think you need to kind of classify everything exactly. But I think that there is a important distinction between sustainable and impact investing. My long-term view is that sustainable investing is just investing really well and looking after the environment, the people, and your financial returns. And then ultimately, at some stage, when the financial ecosystem all heads in that direction, there's probably no longer any need for impact investing. But at this stage, I think there is. So my definition of sustainable investing, so we're going to transition to a sustainable investment portfolio, is investing in those companies that produce goods and services consistent with a low carbon, prosperous, equitable, healthy and safe world and environment. Our definition for impact investment is where we're looking for that measurable social or environmental outcome alongside a financial return. And why I think it's important to have that distinction around impact investments at this stage is we need to see capital to flow into that sustainable investment ecosystem. So we need capital that has that intentionality to make a difference around the social environment element. And that also has that additionality that, those social environmental impacts wouldn't occur without that capital. So I see it's really important over the next sort of 5, 10, 15 years to have capital flowing into the impact investment ecosystem where we can lead the commercial markets and show you can really get good financial returns and look after the environment and people. And as that transitions to the rest of the finance system being sustainable, the need for those impact investment allocations will probably reduce in the future.
I agree. I think it's a spectrum, isn't it? It's a spectrum at the moment. And there was debate at the impact investment at the RIA conference about, do we need to have impact investment as a standalone thing when we've got sustainable finance? Is it not the same thing? And in my view, I think probably in alignment with our is that for now, yes, we do. And the two key reasons I think we need that is the intentionality and the additionality. Now, not all sustainable finance investments will have those two things. When you go into an impact investment, both the investor and the investee have to be intentional that they want to have a positive environmental social outcome. It needs to be measured. So measurement's probably another key word, and that would be true of sustainable finance also. The additionality, you've got to bring something to the table other than your cash. So for sustainable finance, you could have a portfolio that's fairly hands-off. I think with impact investment, you really need to be saying, what else can I bring? It could be your connections into the community. And we'll probably come to that later when we talk about the role of philanthropy and impact investment. But I think those connections to those who you seek to serve is really important. And philanthropic trust can be part of opening up those connections.
The other thing that I kind of quite often struggle with is this terminology, impact investing, because every investment has an impact. It'll either have a positive impact or a negative impact. There's very few that have a neutral impact. Yeah. And so when I kind of boil things down to, whether you talk about sustainable investing or not, is why wouldn't you want to have all your investments actually having a positive impact at the same time? And so for me, that's just a kind of simple way I rationalize things in my head. And now I think, the world is pivoting into this space. If you look where it's all heading, if you don't pivot into the sustainable and positive impact kind of space, you're going to be kind of left behind. And so we're doing it not just because it aligns with our values and it's the right thing to do. We fundamentally believe that's going to provide the superior financial returns looking ahead for the next 20, 30 years as well, because this is where the capital is flowing. This is where all our best and brightest, this is where Raywin's son wants to work. This is where the regulatory environment's going to support. Yeah. So we're just pivoting, at the front of that kind of tidal wave into something that's going to be really supportive going forward.
Absolutely. And to come back to those United Nations Sustainable Development Goals, you could look at those goals and say they're just 17 risk points. And so a prudent investor has to look at risk, and climate change is a huge risk. So if we're not looking at those things, we're not being prudent investors.
I completely agree. I think if you're an investor and you don't have climate change at the top of your risk register, you're doing something wrong. And when I think about risks and when I talk to my board, I always say against every risk, there's an opportunity. So if climate change is your biggest risk and you start kind of treating it as such, there's a huge amount of opportunities out there to invest in stuff, which is actually creating these solutions for climate change. And that's where the capital flow, and that's where you're going to get your best returns as well. So just because it's a risk doesn't mean it's not an opportunity. Generally, out of risk become the best opportunities as well.
Yeah.
We've really seen that, haven't we, Raywin and Alistair, with a lot of the shareholder side of things and the global companies, them voting on a lot of this, and that's really acknowledgement of that, what that risk could actually translate into. So you're absolutely right in that respect. Just while we're on terms, Raywin, you mentioned blended finance. What can you just give your description of that?
Yes, so blended finance, and it's particularly from the aspect of the perspective of a community trust or a philanthropic trust. You can, social finance is a whole spectrum of it and ways you can use it. And a very special portion of that is grant funding. Grant funding can do things that other funding can't. It can unlock investment. It can get things investment ready. So sometimes when we're wanting to invest in a portfolio, there might not be a fund, an impact investment fund to invest in. So perhaps some grant funding could be used to get a portfolio or a fund ready, which then we can put our investment funds into. Now, there are different types of funding, but sometimes they're both very powerful when they work together. It could be that you, I know Aotearoa Foundation, for example, do investment readiness grants, which is something WEL Energy Trust supports, because we want to see those social enterprises who are doing good grow, and then they become investment ready, and we want to invest our investment funds in them. So we use both pots of money to build the environment, if you like.
That's a great description. Thank you, Rowan. Just hopping here, just based on what Alistair and Rowan have said, please do use the chat if there's things that just you didn't quite make sense to you, and we're certainly happy to clarify. Actually, we just got a question here. Thanks very much, Brian. Are your impact investing allocations restricted to local private investments, or are illicit assets also included? Raymond or Alistair, do either of you have something to comment on that?
So our trust deed says we're there.
Thanks, Brian.
Yeah, thanks for that question. It's a really good question. Our trust deed says we're there to primarily benefit the Bay of Plenty. So the majority of our impact investments are based in the Bay of Plenty, but we kind of also acknowledge that the Bay of Plenty is not an island. So actually, if we're going to be doing something around carbon or water quality, quite often it has to be outside of our region. In fact, actually the whole New Zealand kind of ecosystem as a whole needs to be kind of supported. So we've acknowledged that in terms of our SIPO, we're willing to invest in impact investments outside of the region if it grows the impact investment ecosystem as a whole, if it has long-term, benefits for the Bay of Plenty as well. And so we're also increasingly open to impact investments offshore. Again, what we need to do, and I think RIA, Responsible Investment Association, just come out with some really good guidebooks around actually making sure if you're going to call yourself an impact fund, you need to actually have that intentionality and additionality and all that kind of go through those hoops. But we're very open to investing in that space in terms of funds that invest in kind of effectively listed companies, etc. at the same time. And I know some of our private equity managers are starting to head into this space as well. So we're kind of open to those as well.
Yeah, so we're similar. I want to show you a piece of paper, which I can't read that, but you can find it on our website, which is welenergytrust.co.nz. It's our investment strategy on a page,
Great.
my friend. And what it shows is there's a whole spectrum of investment, and sometimes there's a blurry line between them. And you've got to work within your trust deeds, but there are sometimes questions to be asked, but is this an impact investment? It provides a social environmental return and a full financial return, or is it a little bit concessionary? And when it comes to place-based investment, our trust is open to slightly concessionary investments. Sometimes that is called social investment, but the terms become confusing. So just thinking a true impact investment should be a full financial return, in which case under our trust deed, and I believe most trust deed, there is no limitation on where you can invest.
Yeah.
Just as there's no limitation on your portfolio equity investments.
The other thing, so we're currently exploring a renewable energy investment opportunity in New Zealand. It probably doesn't tick our impact investment allocation because it doesn't have, because they're probably going to get that investment funds anyway. So it doesn't really tick our additionality perspective, but it looks like it's going to have really good returns, really good reduction in carbon footprint across New Zealand. So we'll be looking to invest in that potentially for our infrastructure bucket. So you can look at your other asset classes there and go, actually, a lot of these investments going forward just stack up on their own rights anyway, but they're part of those solutions to transition to a low carbon world. So we might do that investment out of our infrastructure allocation rather than out of impact investment allocation, even though to some extent it is an impact investment as well. Yeah. So as Raymond said, it's kind of these blurred lines, and I don't think you get too caught up in these things, and just work out what do the best investing.
We talked a little bit about the investment within the context of a region. You mentioned that in terms of the Waikato Wellbeing Project, for example. One of the themes that we had was what actually makes it unique within the context of Aotearoa New Zealand impact investing. Would you just comment on that?
Yeah, so I think we have a real strength and advantage in Aotearoa New Zealand with the Te Ao Māori lens that we can bring to the way we operate. If you think about Te Ao Māori, it's long-term, it's community-based, not rather than the individual. It's putting the environment at the heart of things. So there are a whole lot of strengths that are just part of who we are as a nation and who Māori are as mana whenua, that we can lean into to benefit our investments and impact investment. So that's one advantage. Another advantage, I think, is with both the philanthropic trusts we have around New Zealand, which not everybody has, community trusts or energy trusts, which can have a mandate to invest locally. But even more than that, iwi, who are of a place and will invest in their place, will always be in that place. So we have a real incentive in New Zealand for place-based investment and for impact investment.
Yeah, no, I agree with that. I think New Zealand leads the way in many things, like, you think sailing, producing milk, but we clearly don't lead the way around impact investing and sustainable investing. But I think, because of what Raewyn mentioned about the Te Ao Māori perspective, I think the Treaty of Waitangi and the commitments that the Crown has to make from the, that participation protection element align really well as well. But, we're small enough that actually everyone knows each other. So this ecosystem is actually really small. And so when we went to the RIA Responsible Investment Conference, up in Auckland a couple of weeks ago, it's a pretty small network in terms of the financial and impact investment ecosystem in New Zealand. So, I think we are behind some of those leading countries in the world, but I think because of what Raewyn talked about and the closeness of our network and the willingness, everyone's willing to share in this kind of space. No one's holding on to their IP. Everything's open source. Raewyn just put up some big complicated slide. So everything's open source. So I think we actually have the ability in the next 5 years to get ahead of most of those other leading countries and actually really show the world what it can look like as well. So, I'm really positive about New Zealand and its uniqueness.
Yeah.
I really like the idea of the open source side of things, and I think that's certainly a principle that we'd really like in terms of the impact investing network. I mean, it's fabulous having this community of practice, and we're trying to get as much as we can on terms of the website. So if anyone does have anything to share amongst the community, then please do support us with that principle. We have talked to Raewyn, and we'll stay with you. We've talked a little bit, you both talked a little bit about some of the links there between philanthropy and impact investing, but I just wonder if we could actually just zone in on that a little bit more and provide some more examples of what you've done and potentially what you actually see in terms of how those two could actually work together into the future. So Raewyn, over to you.
Yeah, thank you. I'd like to just put at the front of this, there could be a misconception out there that impact investment is for and by philanthropic trusts. It's actually, we're a very, very small part of it, an important part, but a small part of impact investment. I think what's happened is philanthropic trusts over time have looked at their grants and they've had their commercial investments over on another side and realised they can make both work for good. But also the grant dollar can really help build the impact investment ecosystem. So the areas that I think that philanthropic trusts can help with, one is through partnership and collaboration. Because you'll have much higher chance of sustainable outcomes if you're actually embedded in working with the people and the environments in which you're trying to make a difference. And philanthropic trusts have some of those connections that they can share with investors. I think ecosystem building, so to give it some practical examples from the WEL Energy Trust perspective, we've taken many opportunities to try and build the ecosystem. One is we put some seed funding into the Impact Investment Network, for example, to try and ensure that we can come together as a community and share ideas. Through Philanthropy New Zealand have come out recently with this Impact Investment in Action, very recent report, which you'll find on the Impact Investment Network website, to really share some case examples of practical examples of impact investment in Aotearoa New Zealand. So that was the connective with Joe Kelly and Rangimarie Price, put that piece of work together, very, very impactful piece of work. We have, for example, seed funded using the blended finance we talked about before, an impact fund in collaboration with our partners over in the Bay, because acknowledging there probably we were going to struggle to find enough impact investments in just our region. So it's a cross-regional impact fund, but blending finance to do that. And also from an advocacy perspective. So speaking particularly with government does have a role to play in making it possible for impact investment to go forward. So philanthropy has a role in advocacy as well. So I think those are the main points there.
Yeah, no, I agree with that. I think the other thing is about philanthropy is so we can quite often take a longer term viewpoint. I think in New Zealand, I'm not sure part of the New Zealand psyche seems to think really kind of short term, like actually, no, we don't want, 2-bedroom little townhouses built in our nice green leafy suburb, but we forget to think that actually in 20 or 30 years time, we're going to retire and we want to stay living next to our kids, and actually it'd be nice to be able to downsize to something like that. So where I see it working really well is that, because we have a long-term viewpoint, so Bay Trust, we're a perpetual trust. We want to be here in 1,000, 2,000 years. So very similar thinking from an iwi perspective and going, actually, we need to look after our environment, but also going, actually, we invest a little bit more upfront in terms of our housing development. We know that's going to pay back in 50 years' time. So we have a lot longer term horizons. And I think we've got the ability in terms of philanthropy to kind of help seed and just actually show if you invest in this kind of long-term way, looking after the environment and our communities, you can make that really good financial return as well. So I think it's kind of new at this stage, but I think it's actually, I've been involved in this last 5 years. So I don't think the concept's new in the financial ecosystem anymore. It's just how to do it. So philanthropy has the ability to, take a little bit more risk at the start. And everything we want to do is kind of seed that so that the commercial capital can follow at the end. It's no point, our balance sheets aren't big enough to fix these issues. What our balance sheets can actually do is invest in things that can show the commercial capital you can get a good return and look after the environment, and that commercial capital can follow, because that's what's going to fix the system. The government's balance sheet is not big enough to fix it. The philanthropic balance sheet sure as hell not. So if you think about housing and the climate change transition we need, it's commercial capital that's going to change it. And so philanthropy has the ability, through its granting, through its ability to take a bit more leadership and risk and think longer term, to kind of lead the way in this area, I think. We're not really disagreeing much, Raywin.
No, we're not. I see a nice question in there about innovation that I'd like to talk
Yeah,
to.
please do. Pick that up, Raywin, if you could.
Particularly was it related to energy. So thank you for that question. And I think impact investment has a real role to play in innovation, and that's another role that philanthropic trusts can take. Philanthropic trusts can take risks with things where government perhaps would be reluctant to do so, and we can prove a case study and make it work, and then take it to others, investors or government, to scale. So an example in the energy space, we know we have to move to more sustainable energy sources. We know we need to move to more distributed generation, making more solar and other innovative solutions. One example that WEL Energy Trust is looking at the moment is in Raglan, a local community near us. They're working on a project around community solar. So the community have been working on this for some time. They want to be in charge of their own destiny in regards to sustainable energy. WEL Networks, which is the company WEL Energy Trust owns, is working alongside them with the technical aspects and the business case, and are prepared to be partners with them. With an impact investment, you need a willing buyer and a willing seller as well. So with WEL Networks, and they're prepared to buy the electricity that community solar will produce, WEL Energy Trust, for example, might be able to invest in that community solar because there's a guaranteed income source. And then you get a win-win-win with community, the environment, and the investor all benefiting from that. And if that were to come off, that Raglan would be the first fully sustainable, in terms of energy, town in the country. Now, if that worked, perhaps it could be tried elsewhere. There's a whole lot of resilience factors around that sort of thing too. So, yeah.
And then I just also noticed a great question around, what role do you see the government progressing the impact investments? And I like being able to tell the government what they should do, which is fantastic. So I think the government, if you think about the biggest impact investor in New Zealand, it pretty much is central government and followed by local government, but they don't still view themselves as such. So if you think about how many hundreds of millions of dollars go out the door from a granting perspective, they can do that, they do that every day, every week, but they seem to still take they seem to think that actually turning it into more of an impact investment is kind of a risky proposition to take. But if you think about that provincial growth fund that they did under the previous government, that was a very large impact investing. It just wasn't really called as such. And I think, to boil it down, I think the government's got a huge role to play here. They understand what it is. There's no central go-to body. It's kind of across 6 or 7 departments at this stage, which is not ideal. But to operate for me as a lead investor, so take some of that kind of grant funding that once it goes out the door, you never get it back, turn into first loss risk kind of capital where commercial capital, philanthropic capital can kind of follow. So, it might be a housing development. They confirm and they confirm what the return is going to be, or take the first loss risk position. So help set up and structure some of these deals so actually the philanthropic capital can follow. So commercial capital, which is where there's unlimited capital, can follow there as well. So, I think that the government can take a much larger role in this, but they have to be willing to do things differently, and they have to kind of acknowledge that what we've done over the last 20 or 30 years hasn't really been working. So let's try a different kind of approach.
So there's a huge role as an investor, and also to make the levers of government work so people can invest in that way is important too.
I agree.
Yeah, and even if you think of local procurement, that can be an issue. And I think government is moving in that direction. You'll often hear them talking about win-win, where they want to invest in things that will have an environmental gain and produce jobs as well. So that's part of the role.
How are we going, Tan? Are we on track at all according to our agenda?
We're going very well, actually. We're going very well. A bit more disagreement. I think testing each other would be probably welcome, but we've got a little bit of time to hopefully unravel some things. Just Dawn, there was just Ray, when you just mentioned about some of the links there, and when we talk about philanthropy and impact investment and around partnership, collaboration, ecosystem building, advocacy. I think did you have any other examples just to clarify that for Dawn and our audience?
The advocacy to government?
Oh yeah, just some examples, potentially say some of the partnerships that have been created as an example.
Okay, so a good example I can give from the Waikato region is our Waikato Regional Housing Initiative. So we have in the region, there are over 40 organisations who are in one way or another seeking to address this massive problem we have with affordable and sustainable housing. The Waikato Regional Housing Initiative has been working for 2 years, initially just bringing all those parties into the room together, everybody from Kāinga Ora to the night shelter, to funders like myself, to co-housing groups, to all sorts of people coming together. And the conversation has really led to an ability to support each other with advocacy where necessary. So the Regional Housing Initiative now has an understanding of what the issue is. They have done a stock take of housing and where their problems are. They're creating a pipeline of the affordable and sustainable housing opportunities that are in the region. And they're able to work with the people who are trying to get those projects off the ground to advocate or to provide some support. It can be financial support. Sometimes it's access to, for example, the WEL Energy Trust concessionary housing bond through community finance, or it might be access to government, for example, to provide the right levers and advocate for those organisations in order to help them move their projects along. So it's been 2 years of work, and it's kind of a collective impact model. It's not just impact investment, sometimes there's other aspects to it, it's commercial investment in there as well. We're trying to move, if you look at the amount of housing that's in the pipeline, there's significant projects out there, 10% of which are in the affordable and sustainable space. If we can move that to 20%, that's doable if we work together as a collective. And what's been really interesting and powerful about it is that government has now recognised this regional housing initiative. So when they come to the region wanting to develop, they're looking to the RHI, Regional Housing Initiative, and saying, does this fit with what communities are saying they need? So rather than having interventions without community being involved, the RHI can advocate on behalf of the community to make sure the right houses are built in the right places.
And I think that advocacy element is really important from a, across a whole different range of sectors, but particularly housing. I think, housing over the last, whatever reason, turned away from a community asset to an individual issue. And so we need to kind of change that thinking back and actually understand that actually housing is a key community infrastructure asset. Once we start changing that thinking, then you start putting housing first. And, for me, I know in my community, I'd much rather have everyone in a house in safe, sustainable, warm housing and a few potholes in the road. So, we need to start changing that kind of thinking back. And that's why I do think you need to support groups that like the Waikato Housing Initiative. So actually, it's just not just building new houses. It's actually, when you go and talk to central local government, they're advocating, but they've actually got solutions as well. So, it's always a struggle if you're from a philanthropic to go, oh, you should do this. It's much easier to go, yeah, we think we should be doing this, and we've got some solutions here that we can kind of package up at the same time and help prove it's going to work. And that's why it works really well, having that granting perspective still, which can do the advocacy, but actually you can back it up, which actually we've helped to invest in this ecosystem. So now we've got a fund that actually can build 100 houses to support what we're saying at the same time.
It's really good that you both, Alison and Raywin, are talking about the housing side of things. Clearly, one of the big areas that we have to solve here. Raywin, you've took part in a session at the REA conference there on place-based investing. Could you just firstly explain a little bit what that issue is, and then link it in terms of some of the themes that you took away from that would be relevant to this discussion here?
If you took a purely utilitarian perspective to impact investment, you'd go to where you could get the biggest bang for your buck, which in reality often wouldn't be in New Zealand. You could get more impact by investing the same money in a developing country than in New Zealand. However, there are reasons why it's good to do both. I'm not to say that's a bad thing to do, but actually there are reasons why sometimes investing in our own backyard is really important, and also supporting communities to do what they want to do in their own backyard in terms of investment. So place-based investing matches investment to the context of the place, the people, and the culture. And social housing is an example of that, the one I gave before. You also have the advantage there of stories of individuals and families. They carry the wisdom that help complement the measurement of impact. So if you're place-based investing and you're embedded in your communities and you're able to tell examples of the impact of that on an individual level, that can complement the more data-based metrics that you're using. And what we measure is what we value. So it's important to have both the qualitative and the quantitative kind of measurement going on there. Also, you have to back the environment before you take from it. So it's having the environment at the center of things as well as your communities.
Yeah, I agree with that. I think I would challenge some of the other trusts that they kind of hide behind almost their place-based investing and say, look, actually our region we look after is, let's just say the Central North Island kind of region. So we're only going to invest in this region. And it's, I think I've said it earlier on, we're not kind of islands here. Actually, we have to be willing to say just because that solar farm's not being built in our region doesn't mean we shouldn't consider it, because actually that's just feeding into the overall what we're trying to do across New Zealand as well, and it might come into your region in the future. So I'd be challenging some of the other trusts out there to say, actually look a bit broader than just your borders. No one, I know doesn't travel from the Bay of Plenty across the Waikato or Auckland or anywhere else. So we're also kind of interconnected, and then just expanding your horizons as well. So we had an interesting discussion with our trustees around actually some of our renewable investments, and actually at the moment most of those are actually offshore. But to some extent, actually the biggest bang we get back is actually offshore at the moment because of the high percentage that's already renewable in New Zealand. So A, we're going to get the best returns out of there, but B, actually probably the most environmental kind of impact in terms of investing in the US, etc., as part of their kind of transition. So I think it's always good to challenge people that say, look, actually we're only going to invest locally from an impact investment perspective, and say, actually, have to think a bit broader than that. Actually, if we all just invest locally in our own places, actually that's not going to solve some of these issues either.
No, and just to one of the questions that I saw pop up there, someone mentioned, how do you get people to change from granting to investment? But I don't think it's a dichotomy like that. I don't think it's one or the other. It's both. It's, so the granting under many trustees will be done in the local region. However, the investing can be done more broadly. You can be a little bit broader in your perspective there.
Yeah, and especially for different sectors. So we just did some analysis and looked at our granting and our impact investing combined. And actually, we've invested the most probably in the housing and environmental ecosystems. When I look at that's actually been coming from our balance sheet. So we invested most of the grants in what we've always traditionally done in the not-for-profit sector. We're going to continue to do that. It's really, really important. And we can invest some of our grants to support the impact investment in social enterprise sector, but it just allows us to invest in a bit of a wider series of these kind of problems by using one of our balance sheet at the same time. So I agree, it's not one or other. In fact, actually, it's a massive advantage to be complementary and actually doing them together. So I recall a situation, we provided some grant funding to a Aotearoa council, it must have been 10 or 15 years ago, to help with their harbour development. And it's just finally coming to the fruition now in terms of the new harbour development with PGF funding. But we've now been able to invest in with Whakatauhea, the mussel factory down there. So, that grant funding, and the council kind of, basically confirmed that at the time, said actually that really helped catalyse this project that was 10 years in the making. So I think grant funding and impact investing are really, really kind of well combined.
I just wanted to also, that session, Raewyn, that we had around place-based investing, just to some of the challenges that could be faced. There was a question, say, of scale there. I mean, did you want to talk about that and what other challenges that you've experienced with that?
I think if it's purely place-based, there is an issue with scale, but there are two big opportunities, I'll call them, in New Zealand: housing and the environment. Now, those, even in any region, any given region, they're at scale. Those to really have an impact on those, that's a decent scale of investment. So I think to get our New Zealand Super Fund, for example, interested, they're really looking at large scale investments of 100 million and more. But we could start at a smaller scale. Philanthropic trusts can back things that are smaller than that. Small impact funds can do that. Prove the concept, and then that can be scaled either within a region or across regions and attract that bigger scale investment.
That's fabulous. I think we'll just move on to a little bit of the ecosystem building. You've talked a little bit about that, for example, with the report from Philanthropy New Zealand. Just both looking at it, you've both been involved very much in terms of founding this community of practice and its development. But we're really interesting looking back now, but a little bit of the benefit of hindsight to kind of describe how you've sort of seen this the ecosystem develop. I know there was comments about that the conversations are a little bit different. For example, at events. Can you talk a little bit about that? Alistair, if I could ask you to start.
Yeah, I can give quite an interesting example. I remember I presented to this responsible investment conference, it must have been 3 or 4 years ago. And this has got, 150, 200 people, mainly investment advisors, look after pretty much everyone's KiwiSaver funds, etc. in the room. And I was presenting on impact investment. So I thought I'd change it around and ask a few questions at the start. So I asked, actually, put your hands up if you know what impact investments are. And probably 95% of the people put their hands up. And then I asked them a question, keep your hands up if you'd actually recommend to your clients that they should actually invest in the impact investments. And everyone put their hands down apart from one guy. And then he sheepishly looked around and put his hand down as well. And so I said, I guarantee if you went out on the street and asked, 100 of those people that are investing in your funds and said, would you want to allocate 2 or 3% of your KiwiSaver portfolio to local housing initiatives with a good solid return, effectively government backed, and that's going to really benefit your local community? I believe, every one of those people, or 99% of those people would say yes. So 3 years ago, I saw a massive disconnect between the financial system and the advisors and what the people really wanted. Whereas at the conference I went to, the same conference I went to just last week, actually, they get it now. They get that the financial system, it has to change, be more sustainable. Actually, we need to be seeding more impact investment funds. The difference is the conversation not about what impact investments are and actually how they benefit everyone. It's actually more, how do we start? What are our first steps? There's not enough product available. There's not enough funds available. So it's very different conversations. There was still a bit of cynicism, a few years ago. Now it's about actually, how do we ramp it up? How do we start? That's what I can see has changed.
Yeah, just the scale perhaps is still on its way. I think in terms of ecosystem building, we can all play a part in that. So thank you everybody for being here today and listening to us. This is part of it. There's magic that happens when people are in a room together as well. So for me and for our impact investment portfolio at WEL Energy Trust, it's 100% relied on the people I've met along the way who've been able to nurture and support and educate me and my trustees to bring us on that journey. So it would be great, the Impact Investment Network having more of these kind of webinars, but also, place-based. If anyone on the call today wanted to host some sort of workshop, then that would be really valuable, bringing the people together to talk about where to next.
Thanks for those thoughts. It did change the dynamic. It is lovely to have these webinars and have your everyone's involvement. The breakfast that we had there in just in Auckland was there was a bit of magic, wasn't there? Just to see everyone's faces, and you could tell there's a good spirit there. I think it's a really good juncture to actually talk about what this all means for everyone and to help everyone take that practical first step. We just had a question here as an example of that in terms of how to establish an impact fund. Just an experience with that. Raywin, do you want to start off with that?
Me? I'd say take a step back. Let's take a step back. You need to start with your governance. So the practical side of starting a fund is exciting and necessary, but if your governance board are still looking at 2 pockets, you've got granting over here and you've got your investments over there, they're not going to be bringing those 2 together. So really getting your governance board on, the first step actually is to get the chair to put in the annual report, we're going to look at impact as part of our investing. So once you've written that down, you put that stake in the sand, then the operational team have a mandate to actually do something about that. So what does that mean? Well, let's learn about impact investment. Let's learn about social finance, presenting papers to the board, showing them opportunities, showing them examples like the research, here from Philanthropy New Zealand. This is what it looks like here. And then you get to have the opportunity to meet through maybe an impact investment network or your for PNZ events, bringing people together, because you won't start a fund on your own. So it's talking to people, talking to existing funds. Perhaps there's a fund elsewhere that could be replicated, But the first step, I think, is governance. Get the governance on board.
And I agree. I think it's actually that journey with the staff and governance and your community kind of at the same time. But it comes back to when you're writing your SIPO, your statement of investment policy and objectives. Actually, if you really believe in this, it needs to be part of your investment beliefs. Just like you have investment beliefs as we believe in a diversified portfolio, etc., etc. Actually, start building it up into your kind of investment beliefs that we believe that actually we can use our capital and balance sheet to make a positive impact. If you start having that, then it means that actually your advisors, your staff actually have to think about actually what that means. And from that, then you can cascade down and going, actually, what are we doing for our investment portfolio as a whole? Actually, do we need a specific allocation for impact investments? Yes, we do. Maybe we don't. If you do that, then it start going, actually, if I was going to start things off now, it would be, we direct invest, because when we started our impact investment journey, there was no, impact investment funds didn't exist at all. Actually, now there's actually funds out there, and you can start actually working with those funds, and they might be able to create a sidecar fund for your region. So it wouldn't necessarily always start from scratch, or they might already be open to investing in your region, and you can invest in them and then co-invest alongside. The other one is if you invest in private equity, a lot of the private equity firms are starting to head in this direction anyway. They're not actually necessarily calling themselves impact funds, but you can actually work closely with them to start going, actually, a lot of the industry they work, they invest in is green tech, it's environmentally friendly. So start measuring what they're actually doing as well. And I think, for me, that's my next step, is not necessarily actually creating more impact funds. It's more, working with those private equity funds to transition them to be more impact kind of focused, or more making sure they're having a positive impact as well.
Yeah.
Just on that topic of governance, which is a really good comment in terms of starting and getting that commitment, but just your experiences about some of the challenges or some of the concerns that you might have experienced from your board or trustees.
So I think those are dissipating. That's one of the changes we've seen over the last 5 years. There was a fear that it wasn't prudent investment. And a lot of trustees, in fact, trustees have a fiduciary duty. So that fiduciary duty was a block, but the Trust Act has changed. Many people's trustees have changed. And also with the risk in the world around climate change and other things, it's been recognised that actually it's not prudent to invest without a view to some of those risk factors.
There was a great quote I heard last week, which is, if you're in a large investment vehicle like ourselves, if you're not part of the housing solution, you're part of the problem. And I completely agree with that. If you just keep on investing in the standard way and you see this massive housing, I call it a disaster, our trust calls it a disaster out there, then you're actually part of the problem. So I think, that mindset is kind of definitely changing out there, which is really positive. But there's challenges. When we first started, there was a perception that they all had to be concessionary. And so we've proven actually, some of our best returns, we made it out of our impact funds. There was also this perception there wasn't enough deal flow out there. Actually, at the moment, we've probably got 10 or 15 opportunities in front of us. There's no shortage of deal flow when you're actually out there actively looking for it. What there is at the moment is a shortage of co-investors and a shortage of really knowledgeable co-investors. And, what I think in New Zealand, there's a shortage, and it's probably worldwide, of people that actually have that analytical kind of mindset to do the due diligence on deals, but also really understand the measurable social and environmental impact as well. So trying to find people like that are challenging. And so that's why I think, having more funds out there that you can co-invest alongside, it's really important. There's not enough co-investors in the space at this stage.
I just wanted to remind the audience, we've got probably about 2 or so minutes. It's been, it's gone really quick. I don't know if everyone else, that usually means we're having some type of fun. Watch for Alistair and everyone's reactions right now. But yeah, a couple of minutes if you for you to have a chance.
Can I just touch on, there's an interesting...
Yes, of course, Alistair.
Came up around social enterprises. And actually that, for me, that's still a challenge out there. We haven't really cracked, which is, if you think about typical for-profit, right? You have these owners that are willing to invest years of their life at pretty much no, earning minimum wage or kind of less, in the expectation that they'll get a big, massive financial payoff when they sell that company or organization 5 or 10 years down the track in the future. Well, social enterprises are quite different than that, because their overarching mission is generally to have that social or environmental impact. So it's actually, how do you support those enterprises at the start when they're not going to make that big personal financial kind of windfall at the end? And I know we've been doing some work in the Bay of Plenty in terms of actually how we can support that social enterprise ecosystem better, because I think it's not in the traditional way that we've supported it before. It's not necessarily in grant funding either. There's something in the middle there that we're still kind of working through about actually how to really grow those social enterprises when you don't get that big personal windfall, so you can invest. You tell your wife, we're going to put all our mortgage on the line here and we're going to invest 10 years out of our life because then we might make $5 million. That doesn't work in the social enterprise stage. So we need to think how we can support them in a different way. And we're still just working through that. So it's a really good question.
There's a last question there. We probably won't have time to address it properly. The not-for-profit sector with impact investing. It's a big one. And I know there's lots of examples in the UK, but generally you need government or a major funder to come in. You need the provider, the investor and government to back that outcome. So outcomes-based funding is something through big society capital and other things. And there are good examples of that, but in New Zealand, I haven't seen a lot of that now.
And people and organisations need to realise not every not-for-profit can be investable entity. Some actually they can spend a long time thinking about actually how they can actually turn it, create a revenue stream or a commercial revenue stream. Some of them, unfortunately, actually they just need to, stick with actually granting is the way we're going to be supporting them. Not all, so, not-for-profit can create that kind of social enterprise and become an investable entity. Some can, but, we need kind of some also are kind of challenges as well.
There's definitely a place for just charitable grants, and there always will be.
Thank you very much. Alison, Raywin, did you want to have any final thoughts before I wrap up here?
No, I just, come back to that, there's some massive challenges out there, in particular, the two that really concern our trust is housing and climate change. They're by far our two biggest risks, and we classify them both as disasters. And we need to be willing to change our thinking. We can't just keep on doing the same thing and accept, that, and think we're going to get a different result. So that means funders like ourselves and other funders and the not-for-profit sector and the for-profit sector have to change the way we're heading. Because when I look ahead, I see real challenges for my children and children's future. And, for me, I'm not happy about that.
Yeah, we're out of time, so I'll just back you there. If we don't do things differently, we won't get a different result. So that's what it comes down to.
Awesome.
Those are two really fabulous thoughts there in terms of for us to end with. I just wanted to thank a few people of course, Raywin and Alistair, to Philanthropy New Zealand, who have been very supportive of us and this particular webinar, and also, of course, to you to participate as a community of practice. We just really wanted to end and say thank you very much to Raywin, who is, she will be finishing with our WEL Energy Trust at the end of July, and I certainly will miss her a lot because she's contributed just so many over a number of years now in terms of the impact investing space. Unsurprisingly, Raywin is doing something very inspired, and she's going to go study full-time at the University College London to broaden the knowledge that the amazing knowledge she already has. So that's fabulous. So Raywin, I really wanted to say on behalf of everyone in the Impact Investing Network, thank you so much for your immense contribution.
Thank you, Tan. Thank you, everybody. Much appreciated.
She's got tears running down her cheeks after that, Tan. That was great.
No, I really do mean that. It's easy to say when you mean it, right? So this will be hopefully we'll put this up the recording really soon. If you wanted to come back and revisit it, and please do visit our website. It's just impactinvestingnetwork.co.nz, and just keep this conversation going. Thank you very much, and have a good rest of the day.
Thank you. Thanks, Tan. Thanks, everybody. Have a good day.